Welcome to Illuminati Silver. We tell you the truth about silver. Today is very early Monday morning, the 18th of March 2024. And we're discussing briefly why silver outshone gold last week and what we can expect this coming week. Now, this is a repeat of our weekly update published on Sunday. If you've listened to it before, you're welcome to listen again. However, if you haven't, then this is the right video for you. Now first, just a quick reminder that we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who've not as yet joined that channel. Now, gold fell $23 last week, falling from $2,179 to $2,156, having been as high as $21.89 and as low as $21.51, a fall of 1%. In our last update, we predicted that gold would trade between $21.50 and $22.50, which it did comfortably. Gold spread between high and low was just $38 in spite of its $23 fall, a distinct difference compared with the previous week's difference of $116. In sterling terms, gold was unchanged at £1,695, and in euros it was down 12 euros at €1,981. Silver, however, bucked the trend and rose 85 cents, rising from $24.35 to $25.20, having been as high as $25.46 and as low as $24.03, a rise of 3.5%. Now remember, that's 3.5% rise compared with gold's 1% fall. Last weekend, we forecast that silver would move between $23.25 and $25.25, with 23 to 26 as outliers. Again, silver moved well within these ranges. The difference between its high and low was $1.43, compared with $2.20 the week before. In sterling terms, silver was up 87 pence at £19.81, and in euros it was up 0.91 euros, not far off a euro, at 23.17 euros. The gold to silver ratio fell 4 points, from 89.5 to 1 to 85.5 to 1. Bitcoin currently stands at $69,880, that's up $1,400, though it was well above $72,000 earlier in the week. Equity is marginally lower, with the Dow Jones down 8 points, yes, just 8 points, at 38,714. The S&P down 6 points, can you believe it, at 5,117. And the Nasdaq Composite down 112 points at 15,973. But the good old British FTSE was up at last 68 points at 7,727. Oil prices were higher, unfortunately quite a few dollars higher, with Brent crude at $85.34, that's up $3.26, and WTI crude up $3.03 at $81.04. The dollar index was also up at 103.43, and that's up 0.72 points on the week. And we'll explain why this happened in a few moments. Last week we said to look at three important figures. CPI data, which came in as expected, except that the core CPI was 0.1% higher than expected, but at the same rate as the previous month. This means that the CPI year over year has held at 3.1%, so it's not really going down, and core CPI, in spite of the marginal rise for February, has still fallen year over year from 3.9 to 3.7%. Both still a fair way off the 2% target. This disappointment did cause gold to fall in price. It then recovered Wednesday, only to fall back towards the end of the week. The next figures we said to look out for were retail sales. They came in lower than expected but higher than January's figures. February saw a positive figure of 0.6% compared with expectations of 0.8%. thus giving an indication at least that inflation could be curbed because the amount of retail sales was lower than anticipated. However, the third figure we asked you to watch out for were PPI, otherwise known as the Producer Price Index, and this was higher than anticipated for February at 0.6% compared with expectations of 0.3%, and the core PPI rate is often credited with giving a futuristic view of inflation. Now, the main headline, once these figures were announced, that's all of them, stated, "Wholesale price increases add to the picture of persistent inflation." You see, over the past 12 months, wholesale prices have risen 1.6%, which is up from 1% in the prior month. That's the highest reading since September. This rise in core CPI and stronger PPI figures almost guarantee that rates will not reduce until at least June. And this disappointed both equity markets and precious metals, though silver bucked the trend, which we will discuss in a moment or so. Now, this coming week, we suggest you watch out for Wednesday's FOMC interest rate decision day. Now, rates are not going to move. They won't go up or down, 100% certain. However, it's what Fed Chair Jerome Powell says, which is going to potentially affect markets. We believe he will be hawkish and will be content to prick the equity bubble ever so slightly by appearing extra tough on inflation, as the underlying figures are not really helping the winning battle against inflation. Now, there are other reports due out next week, but this is the one we are watching most closely. So gold is down and silver is up. Why? Well, we saw gold commence the week on a strong footing, reaching an all-time high of $2,188. That happened on Monday. Now, this surge was largely attributed to growing investor optimism regarding a possible Federal Reserve interest cut by June, if not sooner. However, as the week progressed, gold prices began to retract, influenced by renewed inflation concerns. Now, this is what James Heischig of FX Empire reported yesterday. Quote, "The higher-than-expected inflation readings led to a recalibration of market expectations regarding US interest rate cuts. The data over the week suggested persistent inflationary pressures, reducing the likelihood of immediate rate reductions. As a result, gold, which does not yield returns, becomes less attractive in a high interest rate environment. The US dollar index, a measure against 6 major currencies, recorded a significant weekly gain of 0.7%, the largest since mid-January. This gain in the dollar index made gold more expensive for overseas buyers, contributing to the metal's price drop. Additionally, US Treasury yields rose last week as the market adjusted its outlook on interest rates post the inflation data release." Unquote. Now, for next week, this is what he concludes. The upcoming week holds key events that could further influence gold prices. The Federal Reserve's meeting is a focal point, with no rate changes expected but keen market interest in any signals regarding future cuts. The Bank of Japan is also a point of interest, potentially moving away from negative interest rates. Similarly, meetings of the Bank of England, the Swiss National Bank, and discussions within the European Central Bank about rate reductions will be closely watched. In summary, while gold traditionally serves as an inflation hedge, the current market scenario of potentially prolonged high interest rates and a strengthening dollar presents a bearish short-term outlook for the metal. Investors and traders should closely monitor central banks' decisions and global economic indicators in the coming week to gauge the direction of the gold market. Unquote. And we agree with him. But what about silver, we hear you ask? Well, traditionally silver prices decrease in environments with higher interest rates and a strong dollar. The dollar index gained, as I've mentioned, 0.7% last week. However, silver's recent performance diverged from these expected trends. Now, this is what James has commented with regards to silver, and once again, we agree with him. Quote, Despite increases in treasury yields and the dollar index reaching a peak of 103.43, silver prices experienced an upswing. This behavior indicates a change in trader focus. Silver's current lower price compared to gold seems to drive demand, outweighing traditional economic influences, unquote. And he concludes by saying, quote, yet silver's recent rally, despite factors that typically lead to a price drop, suggests that traders might continue focusing on its relative affordability and potential for appreciation independent of the Fed's stance. The CME FedWatch tool shows a 59% likelihood of a rate cut by June, down from earlier predictions. This adjustment could influence silver's attractiveness to traders, unquote. So bearing all this in mind, what's our forecast for gold and silver this coming week? Well, we envisage gold will trade between $2,100 and $2,175, with $2,070 to $2,190 as outliers. Silver has a slightly wider scope in either direction, in fact. So we predict silver will trade normally between 24 and 26, with 23.75 to 26.50 as outliers. What do you think? Please do share your thoughts. Thank you for listening. We would appreciate it if you would give this video a thumbs up, subscribe, press the bell sign. Have a great, enjoyable weekend, though there's not much left of it by the time this video comes out. And as always, we wish you a prosperous week ahead.